I think with regards to ETFs in particular, I think as the market has grown in terms of the availability of ETFs, and as ETFs have sought to provide exposure to more niche and specialist areas of the market, so commodities, specialist parts of the fixed income market in particular, also I guess on the equity side, you've got the smart beta type strategies coming into play now as well. I think there is a real need for investors to look at those ETFs from a due diligence and research standpoint in a lot more detail. I think there is a risk out there that all investors believe that the ETFs, all ETFs are created equally, and an ETF on the S&P 500 is not necessarily the same as an ETF on loans or frontier markets or some of those more kind of specialist areas. And I think that's where certainly on our side, and I would say investors more broadly need to do this, is they really need to dig down a little bit further in terms of understanding the underlying exposures, in terms of what the ETF's actually giving you, what the underlying index is, what are the risks within that, the structure of the ETF, how it replicates that return, and then the AUMs in the ETFs, the tracking area, the liquidity, because some of these specialist areas that we're seeing ETFs go into right now, if we can't find the investment talent to give you an active exposure, then certainly we should be looking at a passive exposure to see if there's an option there. If there isn't, then you might need to have a look at some other route to access that asset class. One thing I'm curious about, if we look at the plumbing and the building merchants, they were once just outlets for the trade. They're now opening up to the general public. Is the same thing happening in ETFs, with the previously institutional tools now available for a DIY audience? Is this a good thing, Lorne, that members of the general public don't necessarily need advisors and bankers anymore, or is there something inherently unhealthy about this DIY mentality that's taking hold amongst the investing public?
Everybody can now buy an ETF, and it's quite easy to do. And we're moving into a digital world. There's digital media where you can receive the information, you can trade on screens, and all of that didn't exist a few years ago. There is risk where investors can simply go out and buy something, perhaps persuaded that it's the cheapest thing around. And I think that the race to the bottom on fees is very dangerous, because encouraging everybody to buy something that is getting cheaper and cheaper encourages them potentially to go into investments and vehicles that may not be the best quality. They may not be the safest ones. They may not have done all the proprietary filter processes that a professional advisor or investment manager needs to do. And the result is that when the next crisis comes, as it surely will, there is a likelihood, with this ease of access and persuasion that perhaps cheapest is best, is that investors will suddenly find that they were in a car that was cheaply constructed. And when the crash happens, you don't want to be in the cheapest car. You want to be in the one that has the best quality. So risk metrics in selection are very important, which means that you do need a professional advisor. And investment managers will also have their own proprietary filter processes which select the best quality vehicles. So, and it comes on back to the question about, are there too many products out there? There probably are too many products out there, and there will always be fringe players trying to get in. And it's important to select on quality measures. And there are hundreds of ETFs that are closing each year, as there are hundreds that are opening. And that's a process that will continue, and I think the market will continue to grow. There's probably something like $250 billion of new money going into ETFs each year, and it's growing at a huge rate, over 20% compound annual growth rate. So that market is here to stay, and it will continue to grow, but caveat emptor if you're just looking at price.